Don't get shocked and surprised by your credit score. Know the difference between FICO and Vantage score today. Hi, I'm Brad with the Firestarter Pack. We're your guide on your path to financial independence and retiring early. Today we're going to talk all about credit scores and the difference between a FICO score and a Vantage score. FICO and Vantage are the two main families of credit scores that are out there today. These scores will impact almost every aspect of your life, and you need to understand what they mean and how to keep them up. Why do credit scores exist in the first place? What they do is allow lenders and other people to understand your credit worthiness and how likely you are to uphold your obligations when you sign into an agreement with them. Let's start with the two most common credit scores out there in use today, the FICO 8 score and the Vantage 3.0 score. On the surface, they seem very similar. They both have a range of 300 to 850. They both use data from the three credit bureaus, Experian, Equifax, and TransUnion. They use the exact same data for the most part from the credit bureaus to generate a score. Your payment history, the number of accounts you have open, how long they've been open, the type of accounts, how much your credit you've used, how much credit you have available. Yet in practice, these credit scores are typically used for very different things. It is very important to understand when a credit score is going to be used and which type of credit score will be used to make sure you have the highest chance of success of reaching your financial goals. Many people are shocked to find out that they have a very large difference between their FICO scores and their Vantage scores, sometimes as much as 100 points or even more. That could be the difference from what is considered a very good score to a very poor score. And this unfortunately leads to many nasty surprises when people go to get a mortgage or they go to get a car loan and they get denied, and the lender gives them a credit score and it's wildly different from what they thought they had. While each credit score family looks at the same type of data, they treat that data differently. When it comes to FICO scoring, they call it weighting the data. When it comes to Vantage scoring, they talk about how these factors influence the score. So let's see how they compare. To start off with, the number one most important thing for both scoring families is your payment history. Your payment history for FICO is weighted to account for 35% of your credit score, whereas in Vantage, it amounts to 40% of your credit score. Your payment history is essentially, how well you've paid things on time. Have you always paid on time, or have you been late? Have you been extremely late? There is a very big difference between, say, being 30 days late, 60 days late, 90, 120 days late. A 30-day late typically is not the end of the world, doesn't hurt you too bad in the long run. Multiples, though, will hurt you. And then anything above 60 days late is extremely bad for your credit scores, no matter which family is used. So the next factor that comes into play is what's called your utilization. This is how much credit overall available to you that you've actually used. For your FICO score, this amounts to 30% of your score. For your Vantage 3.0 score, it amounts to 20% of your score. So this is where the two models start looking at things quite a bit differently. Let's start with the FICO 8 model. The next big bucket is the overall length of your credit history. So, do you only have accounts that are 1 year old versus 15 years old? That makes a big difference in your FICO score, and it amounts to 15% of your total score. It looks at your overall credit mix, which is essentially the type of accounts that you have. Do you have credit cards in addition to installment loans, such as a car loan or a personal loan? Do you have a mortgage? So the more of a variety that you have, the more likely you are to stay on top of things. The lenders think you're more reliable because you're able to handle different types of credit. So your credit mix for a FICO 8 score amounts to about 10% of your total score. And the last thing on your FICO 8 score is how much new credit do you have? How many times have you applied for credit, which will show up as inquiries on your credit score, on your credit report? And then how many new accounts have you actually opened? In this case, your new credit amounts to 10% of your total score. So now you should see everything totals up to 100% on the FICO 8 side. So let's take a look over at the remainder of the Vantage 3.0 scores. Vantage 3.0 looks at your overall credit mix and credit types combined with your age and put them into one bucket. So they call this your credit depth. And with that, this bucket is 21% of your total score for Vantage 3.0 score. So Vantage 3.0 gets a little bit more granular with how they look at the data in your file. So the next thing that they look at is overall balances on your account. And this bucket for Vantage 3.0 amounts to 11% of your score. Next, just like FICO 8, Vantage 3.0 does look at recent credit, so inquiries, new accounts, and so forth, but it only amounts to 5% of your score for a Vantage 3.0 model. And then lastly, Vantage 3.0 looks at your total amount of credit available to you. So if you have cards with very high credit limits, this tends to help you with a Vantage 3.0 score, but it's not a huge amount. This bucket only amounts to 3% of the Vantage 3.0 score. Now you can probably see why from looking at these two different graphs here, why a score for Vantage or FICO might be drastically different even though it's tracking the same person. They just look at that data very differently, and they try to do things a little differently because Vantage, for the most part, is looking at more recent history and looks at your overall credit profile a little bit in more detail than the older FICO 8 score. Now here are some general guidelines when you're going to run into a lender or an institution using a FICO versus a Vantage score. Number one, for the most part, anytime you're going to go borrow money, open a credit card, a mortgage, try to get a car, you're almost always going to run into a FICO score of some sort. Very few lenders actually use a Vantage score right now to actually lend money. Now, this isn't to say Vantage scores aren't widely used. They actually are. The last data I looked at, they pulled over 12 billion credit scores last year. So, Vantage score, you'll find that used a lot of times when you go to rent an apartment. And instead of pulling a FICO score, they'll pull a Vantage score. When you try to get utilities in your name, or you try to sign up for cell phone service, a lot of those secondary, you can kind of call them lenders, but not necessarily lending you money, but they want to get into an agreement with you that does involve you paying them money. So they want to make sure that you pay your bills. So a Vantage score is a very good indicator of how well you're going to pay your bills. Another reason why these institutions will use a Vantage score over a FICO, it actually costs them a lot less money to pull a Vantage score for a person than it does a FICO score. Now, most sites that you sign up to, such as Wallet Hub, Credit Karma, Mint, or let's say through Chase Bank and Credit Journey, most of those services that track your credit and provide you a credit score, those provide a Vantage score of some sort. However, you can get a FICO score for free. You can go to Experian.com. You can also go to CreditScorecard.com, which is actually run by Discover. And both of those you can get a FICO 8 score for free. Another difference between Vantage and FICO is that, especially when you're first starting out, which a lot of my viewers might be, your Vantage score will happen quicker. It only takes a month or two of credit history before a Vantage score can be generated, whereas a FICO score requires at least 6 months of history. There are also some other differences, such as dealing with collection accounts. FICO will just punish you severely if you have a collection on your credit report. Doesn't matter if it's paid or not, at least a FICO 8 or any of the older models. Whereas a Vantage score, a collection will hurt you, but once you pay that collection, it actually is ignored by most of the Vantage models. Actually, it is ignored by the Vantage models. So you might be wondering, if these two scores are so drastically different, how can you manage all this and keep your scores high in both? It's actually pretty simple, because the rules to keep a high credit score is really the same regardless of the scoring model. Number one, it comes down to you have to pay your bills on time. Never let a bill go late if you can avoid it. Just do whatever you can to make sure your bills are paid on time. Number two is not utilizing all of the credit available to you. If you have a $10,000 credit card, don't use $9,000 of it and let that report monthly to your credit report, because that shows that you're possibly strapped for cash, and that's going to tank your credit report. Now, You can still use your credit card a lot, but you just want to make sure that you pay it off by the end of the month so that either it reports a zero balance or it only reports a small balance. If you actually report a small balance, that actually gives you a slight boost to your credit score. Now, as long as you follow those two rules, you're going to find that both of your scores will remain high. You'll be in the very good category. And when you go to try to get a auto loan or a mortgage or whatever you need, whether it's a credit card or something like that, you're going to be in the best position to succeed and get approved. So let's talk a little bit more about getting your credit score. So I mentioned some of those free sites like Wallet Hub and Credit Karma. Those are great for just monitoring your credit and monitoring your Vantage score. However, to get your full detailed credit report, go to annualcreditreport.com. That's actually the official site where you can get your full detailed credit report, which has a lot more information on there than what the free sites give you. However, annualcreditreport.com does not provide scores. So you need to go to Experian.com, get a free FICO 8 there, and then go to Discover site creditscorecard.com. Also, when you get some credit cards such as American Express and several others, they will give you a FICO 8 score for free as long as you are a card member. Now here's the thing, when you go to get an auto loan, or especially when you go to get a mortgage, none of those free scores are going to matter. For getting an auto loan, most auto vendors will use what's called an industry-specific version of FICO. So there is a FICO 8 specifically for the auto industry, but then there's also a FICO 5, a FICO 4, a FICO 9, all specific to the auto industry. And it weights things a little bit different. It even has a slightly different range. It goes from 300 to 900. And also, when you go to get a mortgage especially, this is where a lot of people run into issues from looking at a Vantage score or even a FICO 8 score. The vast majority of mortgages in the United States have to use, by regulation, they have to use a FICO 5, a FICO 4, and a FICO 2 score. They use 3 scores. Each score comes from a different credit bureau respectively, and there are 3 different models of FICO, and they provide 3 different scores. Almost invariably, people find out that their FICO 5, 4, and 2 scores are less than their FICO 8. And that can be a shock because you'll see for many loans, such as a FHA loan, or maybe your lender lists their credit score minimums, and you think you're good because your FICO 8 is above the minimum, but then when you go pull your FICO 5, 4, and 2, it's lower, and you're not in the range that you want it to be to get a mortgage. Now, you might still qualify for the mortgage, but because it's not in the best range, you're not going to get the best interest rates. And with a mortgage, that can cost you a lot of money over time. It could be tens of thousands of dollars if you don't get a good interest rate up front, unless you refinance later. Now, to get all these industry-specific scores for FICO, also there's another one for bank cards. So when you go to get a credit card, they also have a version of FICO 8 and so forth for bank cards. None of these scores you can get for free. At least right now, at the time of this video, there really is no option to get them for free. You will have to pay and sign up for a service to get them. But this is worthwhile. I mean, if you're going for a mortgage or you're going for a car, it absolutely is worthwhile to sign up for these services. It'll probably cost you anywhere from as little as $7 to $30, $40 to get at least a 1-month snapshot of your scores. You go back to Experian.com or you go to myfico.com. All these links will be down below. Not sponsored, they're not affiliate links at all. When you sign up for the service, then you can get all of your all the variants on your scores across all the credit bureaus. So you'll get your mortgage scores, you will get your bank card scores, you'll get your auto scores, you'll get all these different scores that are used for different purposes. Now, what you can do many times, once you have that information, you can actually talk to the lender or the institution that you want to borrow from, and you can ask them, what score are you going to pull for me? What variant? And they should be able to tell you that, or they can give you at least the options that's going to be. Now, if it's a mortgage, I can tell you right now, it's going to be FICO 5, 4, and 2. Just, that's what it's going to be. You're going to have some differences when it comes to car loans and especially when it comes to credit cards. Now, with credit cards, you don't necessarily need to get your industry-specific credit score. What I always recommend doing is just go to the pre-approval site for that credit card and just go through the pre-approval process. And if you get pre-approved, you usually are looking pretty good, and you don't need to worry about your actual bank industry scores. Now again, with all these different variants of the scores, the same rules pretty much apply. As long as you pay your bills on time and you don't use up all of your available credit, that's typically going to keep these scores up. But there are some nuances to some of these scores, especially the mortgage ones, because they are older models. So they are a little bit less forgiving if you have any negative information on your credit report. If you have late payments, if you have a charge-off or anything like that, they're going to hurt you a lot more than some of the newer models. And it doesn't matter if the charge-off or the collection is paid, it's just going to hurt you. So you always want to avoid those situations, especially if you're trying to go for a mortgage. Also, when you try to go for a mortgage, other things besides your credit score matter, such as your debt to income ratio, and then how recently have you gotten new credit. Even though you have a high score, if the bank sees right before you going to buy a house that you just bought 2 cars and opened up 2 credit cards, you're probably going to get denied because they're worried that you just taken on too much responsibility and you haven't proven that you can handle it yet. Now, there's new versions of FICO and Vantage scores coming out all the time. There's some coming out this summer, FICO 10 and Vantage 4.0, which is actually already out. And the main differences with these 2 scores is they treat medical collections very differently because a lot of people have had issues with medical collections, and so you don't get penalized nearly as badly, if at all, for those. Then also, they start tracking things over time a little better, and this is something that's going to trip up a lot of people. With your current FICO scores and current Vantage scores, they're basically looking at a single snapshot in time. They pull information from the credit bureau for that month, and they look at that snapshot. They don't look at any history. That changes with FICO 10 and Vantage 4. They are going to look over your credit information over time, and they're going to look at your trending data. Now, this is very important because what a lot of people do, they will keep some balances on their credit card, they'll keep some high utilization, but when they know they're going to get like an auto loan or they try to get a mortgage, they'll go ahead and quickly pay that down, and your utilization will shrink and your credit score will go up for that month. So it's a very quick way to boost your credit score with the current models. That trick will not work with new FICO 10 and Vantage 4. Now, the thing is, they're not in wide use yet, so people have plenty of time. But they should know in the next few years that you want to be aware of that, and if you know you're getting a mortgage or something like that in 2-3 years, you want to actually keep your credit balances and keep the trending information in line so that you won't have an issue in case that those scores actually get adopted. So there you have it. You now know the differences between a FICO score and a Vantage score and why you need to keep track of both. You now have the resources and the information to be fully informed the next time you need to use your credit score. So to keep getting information like this, go ahead and hit subscribe, hit like, and notify so that you get all of our updates from the Firestarter Pack.